Welcome out to Trading Justice 600, big round number. Appropriately, we're going to be talking about a big subject, AI. I joke all the time here on this podcast and in different content that Matt's my AI guy. And I was privy to look at the process he goes through in creating a watch list for AI stocks. And Matt has a AI webinar coming up this week in which he is going to promote, discuss, talk about that process, about the stocks on the AI list that he has created. It is this week. Matt, welcome out to the podcast and tell us a little bit about this upcoming event.
Yeah, we got a webinar coming up on this Wednesday, 7 p.m. Eastern Standard Time. And if you are interested in AI, it's very easy to register. You can just click on the link in the description and hit that register button, and then you will be registered for the AI Gold Rush webinar. And we got some things to talk about this week in that webinar, no doubt about that. But if you do attend, you get access to the free PDF that we're going to give away at the event. And yes, we have an updated watch list to discuss as well. And so excited for the webinar on the 16th. Hopefully we see a whole bunch of our community come out to hang out with me and learn a little bit about the AI marketplace. And, you know, Mark, when you think about AI, we've been talking AI at Tackle Trading for what, 2 years now?
A while, yes.
It's been a while now. I did the first webinar on the AI Gold Rush just about a year ago. And this is now my third edition of the AI Gold Rush watch list. And I decided to do something a little bit different this go around. I still did the tiers, tier 1, tier 2, tier 3. I still ranked them from an importance perspective. But at the end of the day, I also kind of designed a little bit of what I would design an AI ETF based on. And so, yeah, we'll get into it a little bit down the road. But for now, come hang out with us on Wednesday, October 16th, 7 p.m. Eastern Standard Time. And you can register for that free event just by hitting the link in the description below.
Yeah, no, and the PDF is fantastic. The watch list is fantastic. But the real gems in all of this, and we'll talk about this a little bit more here in a few minutes, is Matt walking you through the process of having you understand what AI really is, the different components in it. It's just not a couple companies. And when you understand,
it's evolved.
Yeah. And when you understand the dynamics of it all, you gain some really powerful knowledge about how the world is transforming and how you can take advantage of that as an investor. It's really, really worth your time on multiple fronts.
And not only understanding kind of the build out of AI and these leading companies that are developing the technology, but this go around, I really wanted to focus on that trickle down impact, that downstream impact of secondary companies in the AI build out that have a massive impact on that. Because when you're talking about the very beginning of it, it's all semiconductors, it's all NVDA, it's all AMD, it's all Taiwan Semiconductor. But as you get down the road a little bit, it has a downstream impact. We'll get into that as we get into a little bit of the AI conversation. And I know you have a couple questions on the watch list and whatnot. We'll do that towards the end of the podcast here.
Yeah, no, absolutely. So look forward to that here a little bit later in the podcast. Matt, let's turn to the markets. Over the last few podcasts, we have been laying out a case, reasoning why bulls should be optimistic, right? Why bulls should be optimistic. There has been a lot of storylines. We're not going to recap all of them, but there's been a lot of storylines. There's been a lot of factors that have led us to make that call, make that case. You know, it has played out on that. I'm going to go over a couple of things, but first and foremost, there's no cautious optimism when you've broken out and confirmed any longer, Matt. That's just a technical breakout.
No, that's just a technical breakout. There's you don't have the caution in front of that technical breakout. But I do want to go back to kind of talk about the cautious optimism that we've been talking about in the consolidation over the course of the last 3 weeks or so. It was based on the fact that, number one, we broke out of a multiple time frame situation when the Fed announced that they were going to go into a cutting cycle. And so once they were going to go into a cutting cycle, you really had this conversation of, all right, now it's this whole thing is going to become a little bit more sensitive to the economic conversation versus primarily the inflationary conversation.
And that is a case that you detailed in the newsletter going back 2 months now.
Oh,
right?
yeah. Well, we talk, here's the reality. If you're not a pro member, we talk about things in the market. We talk about things in our pro membership at Tackle Trading that people in the market will be talking about a month from now, 2 months from now, 3 months from now. That's not abnormal for us. But at the end of the day, kind of understanding kind of that cautiousness about the market was it was going to be based on the kind of the transition from inflation to now labor, secondarily PMI reports, and anything that has to do with the economy itself. And when you look at the last 2 weeks of data, you've had really good data coming out on the labor market. You've had good data coming out on the economic landscape. And so the conversation is kind of shifted from won't we have some degree of economic problem here to, well, it does look like this is a soft economic landing and the market is starting to pick up right in line with third quarter earnings season.
Yeah, no, and so, laying out that case ahead of time, when we saw the breakout this week, right? Well, we knew that there were things to help propel it, confirm it, and we have a confirmed breakout in the S&P 500 to end the week, Matt. Break down the technicals for us.
Yeah, when you are looking at the pure technical backdrop in the marketplace, you certainly have just a continuation feel here. We broke out against that multiple time frame 3 weeks ago. You had that consolidation. The way we saw that consolidation was the market playing defense on top of the breakout. But I could understand why traders, investors got concerned over the last few weeks with the consolidation. But the way we saw it was playing defense above that breakout channel, and you really never gave up any support in that consolidation. And then when you broke out on Wednesday, and then you had a little bit of a doji fest on Thursday with some follow-through continuation analysis post banks reporting earnings on Friday. Yeah, there's not, I don't personally see the market as being cautious here. You got 3 out of the last 4 candles that are big green candles going into the breakout. You've had good finishing towards the top end of those candles. Every single 3 out of the last 4 trading sessions. That's a little bit abnormal versus what we saw in the general consolidation. I will say this on the pure technical read. This is a really good technical read in terms of the quality of the pattern. You have a consolidation breakout that you're breaking out of that range. And when you look at some of these traditional indicators, and for those of you listening at home,
and this, by the way, Matt, what you're about to say was my favorite part of reading the newsletter this weekend, is that when you laid this out,
it's an important point.
It was my favorite part of the whole newsletter.
Well, so the reality is, in the consolidation, we were overextended. And so we were playing defense on top of the breakout channel, but we were overextended in that environment. And what happens with these traditional indicators like RSI is that big upward movement in price that propelled the breakout in the first place led to an overextended situation in the short term. The market playing defense over the last 3 weeks before this breakout this week that we had on Wednesday, confirmed on the weekly on Friday, what that does is consolidation. I talk about this all the time in trying to understand these indicators like RSI with our community. It's overextended, but no, it doesn't need to come down to alleviate the overextended, because RSI is relative strength indicator. It's just not measuring upward movement in prices versus downward movement in prices. And it measures it over 14 trading periods. And so you got these big upward movements in price that were coming out of the calculation from a few weeks ago. And so consolidation alleviated that overextended environment, so that when you're going into a breakout this time around, you're not overextended on your RSI. You actually got a pretty good confirmation signal with above 50, underneath 70, going into a breakout. That's textbook when it comes to RSI. Once again, RSI textbook confirmation is when you're above 50, underneath 70, going into a breakout. that shows you that you have room to run here. And that really wasn't necessarily the case. A lot of times we were talking about that breakout of those very important levels in the past. And so, no, RSI was a really good read this week, gave secondary confirmation. And then on MACD, looking at the momentum of the environment going into the breakout, you have a hook and a cross on MACD with it getting back up above the positive level of the histogram right there around 0. And so RSI confirms the breakout has room to run. MACD confirms that you're seeing the early beginnings of momentum in that. That typically, and again, we live in variables, right? We're in a hotly contested election season. We just kicked off earnings season. Obviously, there's going to be some variables along the way, some of those proverbial market landmines out there as well. But from a traditional indicator technical read,
this is a good setup.
The only flaw in the technical read, and I anticipate this improving over the next 2 weeks, is on volume. When you are looking at the volume, you have not seen massive increases. I don't even want to say massive. You haven't seen increases in volume on the breakout. And that's the one flaw in the analysis, is not everybody in the world loved the breakout. But what happens, Mark, take a look at, for example, finance. When you look at finance here this week, they had the exact same volume problem that the rest of the market had over the last consolidation. What happened on Friday, though? On the breakout, big increase in volume on the breakout on Friday. Why did we see a big increase in volume on the breakout on Friday in finance? By the way, finance got a 10-point upgrade for us at Tackle Trading because of this. Massive increase on volume due to earnings. And so I do think some of this volume, and specifically this is to the participation rate right now, some of this is hesitation on the election season. Some of this volume is hesitation on the Iranian-Israeli situation. And quite frankly, I think the most of the hesitation is on earnings coming up. You'll see a pickup in volume this week, just simply due to having 43 S&P 500 companies reporting earnings versus 8 we had last week. And so I do anticipate volume and participation picking up.
Yeah, no, and from an economic standpoint, let's go over to Forex Factor. Let's talk about the economic. There's nothing really from a narrative standpoint to do anything but generally support. Matt talked about a few minutes ago the general economic conditions that have developed in recent weeks that were solid, right? Labor, services PMI was, one of the best readings in almost 2 years. A good backdrop to help, create some positive sentiment. Now, this week was inflation week. And then in the coming weeks, we don't have anything for like 8 trading sessions. Matt, we got, all due respect to retail sales coming up on Thursday. There's nothing to stand in the way from an economic.
Whatever random regional bank reporting. And by the way, that Thursday is after Taiwan Semiconductor and ASML. And I'm sorry, those are 2 companies that are going to have a vastly more important conversation for the market than whatever retail sales says.
So the economic narratives entering the week are pretty much going to be the economic narratives for the next couple weeks, and it's been a not robust but a resilient economy at a minimum. And then you had inflationary data come in. They came in a little hot, but for me, Matt, when I analyzed this, when I thought about it, it's just not a story yet. Right,
I told you it wasn't going to be a story last week.
Last week
you
in this
nailed
podcast,
this. I said
nailed this.
You will not have
in this podcast. I think you specifically said, yeah, if it bumps up to 0.2 and 2.4, you literally
won't care.
The market won't care, right?
And the market did not care. But I'm willing to bet everybody else that was having that conversation thought that was going to be a big deal this week.
Oh yeah, there were a few people. If it comes in hot,
not. The reason it wasn't a big deal is because where expectations were set, even on a miss, the market would not see that as a concern. And so I'm talking in the short term here. And again, I'm an inflationary hawk. Okay. I would not have even embraced a cutting cycle. That's how so this isn't about my opinion. It's about how economic reports work and how the market interprets that data. When you have first of all, inflation was going to be a backseat economic conversation in the first place, given the fact that we're in a cutting cycle and the labor and the pure economic data are more important than the inflationary data. That is in part because in general, guys, the Fed doesn't the Fed doesn't go into a cutting cycle unless they've declared victory on inflation. They might not want to say that because of messaging, but that is in essence what they have done. If they were worried about inflation in any capacity, or if that worry of inflation was bigger than their worry about the economy, this data this week would have been a concern. But it wasn't, because it's a secondary report, and the way the expectations were set versus last month. Remember, the inflation conversation in America today is not a month over month, the rate of the velocity. It is the year over year, and a lot of it is parsed through political messaging. And so I just didn't feel, with where last month's 2.5 number was, and the expectation of this, because I do believe the year over year numbers are more important right now than the month over month numbers. That will change down the road. But I'm just talking about this print this month in this environment. If you didn't get into the 2.5, 2.6 range on the year over year, I just didn't feel it was going to have a big deal against the market, and it played out that way. Now, can this data lead to some concern on the inflationary side down the road? Yes, it can. We certainly don't want to see it go from 2.4 this month to 2.5 next month with another 0.2, 0.3 next month. Of course not. Remember, one data point is just one data point. In an environment, it can be discounted quite aggressively. But if that starts to change and we start to see it again next month and the month after that, all of a sudden we're going to have a different conversation, the same way we had a vastly different conversation last January and February when we saw 2 consecutive data points of concerning inflationary data. But one data point that still goes underneath last month.
It's just not a story right now.
It's just not.
It's just not a story right now.
Inflation is a political story right now. It is not an economic story. And again, I'm not talking about the impact of inflation on people over the last 40 years. I'm just simply talking about the impact of the market this month. And the reason I want to disclaim it like that, Mark, is the inflationary conversation is very much so in the political realm. And I just didn't want my analyst to come across as political at all. I see it as a pure economic situation.
Yeah, no, and so with nothing really major, the narrative's heading in. It's like one eye is on inflation. It's not a story, but we'll keep an eye on inflation.
That was my way of running away from the political side.
Yeah, you got understandable. So one eye on
for a hot election. It's going to be great.
Yes, it is. Yes, it is. But stronger economic data, pretty decent backdrop from an economic standpoint. And now eyes will turn to earnings, right? With the economy taking a back seat, earnings gets to take a front seat. And we have a lot of companies that are going to start reporting this week. You mentioned Taiwan Semiconductors. They are front and center for me on the to-do list this week, right? Thursday before the market bell. But you start getting a cross section this week, and then obviously the next coming weeks. You did an earnings preview last week. Any thoughts on earnings though, Matt?
No, this week it was really kind of the banks that kicked off, and I didn't feel anybody, every single weekend in the newsletter, I do quick hits out of earnings, right? So I do the best earnings reports and the worst earnings reports. I didn't feel there was worst earnings reports this.
Yeah, in fact, when I get to stocks in the news here in a minute, I have a beef with you on that.
I a little bit. I didn't feel there was worst earnings reports. There was nothing and there wasn't a lot. We had like 8 companies that were of importance last week reporting earnings, and most of them were the banks. And so like the banks came through on Friday with good beats on EPS, good net margins and whatnot. Obviously increased participation, breakout, whether it was Wells Fargo or BlackRock or JP Morgan on Friday, they all went up 3, 4, 5%, and they all did pretty much the same thing. But I wouldn't say JP Morgan's 10% beat against expectation, or Wells or BlackRock's 10% beat against expectation, or even Wells Fargo 18% beat against expectation were standouts. To me, the kickstart to earnings with the banks is nothing special, quite frankly. I think what you're trying to see, if I can give a baseball analogy very quickly, you're just trying to get the banks on base. That's it. You're just the banks are the leadoff hitter. You don't need to hit a home run out of the banks. You want to get them on base. You want to play a little bit of Oakland A's baseball, a little bit, right? A little bit of beanie ball. And so you just want to get on base. And I felt like the banks got on base. They certainly beat the expectations on both EPS and revenue. Even that dog Wells Fargo gapped up and ran. And so pretty decent look at on that. Outside of the banks, when you were looking at like Delta, when you're looking at Fastenal had a decent report over the weekend, last week, but Delta, Domino's, like Delta a little down, Domino's slightly better, but there wasn't anything that really stood out to me on the earnings front this week. Now, and that would include themes too. We have no clue about.
Yeah, no themes. There's nothing no earth-shattering news on that right now.
Yeah, but that's the thing about this specific week coming up that is really important, because last quarter, it was this week specifically that we started seeing volatility start to pick up across the market. We started seeing semiconductor sell off very aggressively in this week. And this week is for those of you watching, not listening on an app, where I'm just looking at the second week going into earnings season, last quarter on the S&P 500. And there were two things that happened in that week. Number one, Taiwan Semiconductor did not have the greatest of all time earnings report. And I do say that slightly sarcastic because
let's say it very sarcastic. It was a solid report.
Taiwan had a great, Taiwan was perfectly fine.
But it followed ASML that week.
Yes. Which lowered guidance. For the first time in the AI conversation, we saw a lowering of guidance on an AI name that was important in the infrastructure build out. ASML supplies NVIDIA with chips, for example, and so or the infrastructure to help build the chips. And so you had that storyline. ASML drops guidance, and then Taiwan doesn't increase guidance. That was the kicker. Taiwan didn't increase, whereas the last 6 quarters, NVIDIA, Taiwan, increased guidance. And so there was a theme that developed last quarter that was a negative slowing growth theme for AI in general. And that had a sizable impact on semiconductor software companies, technology, you name it, right? And so you had a big downward movement in price that was really, really volatile. That wasn't the banks kicking off earnings. That was ASML and Taiwan Semiconductor. And so I do think this week is a very important week. And this is really kind of the week where you start to see a little bit of themes get developed. Taiwan, for example, is in my estimation, by far the most important company.
There's not a close second this week. There's not.
No, Taiwan is by far the most important, but ASML is a very important one. ISRG.
Well, it's a sentiment check. I mean, because that was a month of volatility, and it started with ASML. It started and it led into other things. Well, and then we had the carry trade.
Haven't done anything since that time, Mark. These companies went down, they recovered. They have not broken out of the highs that they were before that ASML Taiwan situation. But my point is, it's not just Taiwan Semiconductor and ASML. There's a bunch of AI names reporting this week, but you also get healthcare this week. And the second week of earnings is really healthcare starts coming online.
You start to get a good cross section of companies.
You get the rest of the banks on Monday and Tuesday. You get regional banks throughout the week. So you kind of finish up throughout the banking system in the second week of earnings. This is still the first week because the kickoff is on Friday. And so this is still kind of week one, but you get a better cross section and you get some leadership starting to report as well. And so I would say Taiwan's the number one for me this week. ASML is going to be a gut check one this week in my estimation, but you also get United Health, you get Johnson & Johnson, you get Abbott Labs, you get Goldman Sachs, you get a lot of other companies as well. So big week in earnings.
Yeah, absolutely. And listen, this is where Matt shines for our pro community. Go to tackletrading.com, sign up for that 15-day free trial. You want to be on the lounge during earnings season as Matt is breaking that down. Matt, I want to jump to stocks in the news before we get to global markets, since we're talking a few stocks. Like every podcast, I bring you 5 stocks that were of interest to me for one reason or another. And I am very liberal in how I choose these, because it's my segment. I got to choose what I'm interested in. I'm going to start with NVIDIA. It's freaking on the list every week. It continues when I look at stocks in the news and individual stories. Well, when there is news around NVIDIA and it helps propel price action in NVIDIA, and we know the importance of NVIDIA, it's going to be hard for it to not make my list. Came out with some news from Foxconn, basically supporting the demand aspects of it. Matt, NVIDIA, I mean, it's a leader. It's a general. It is a general of generals.
It is the general of the AI conversation. It's the number one most important stock to the market, number one most important growth stock in the market. They are a linchpin. There's no doubt about that. A week ago, it was Jensen that came out and said, you know what, we are seeing insane demand for our Blackwell chip. And then Foxconn director came out and said, we are seeing amazing demand for our Blackwell chip. The Blackwell chip is obviously the next generation AI GPU.
And there's been positive news flow on NVIDIA for 4 or 5 weeks now, right? Like, you know, and
it also made our report this week as well. Yeah, NVIDIA, a lot of demand equation. And I'll just say this about it. If Jensen's doing it and the Foxconn director's doing it, they better be right. And I think they know
you said this, and you said this in, I don't remember where it was, the Traders Lounge or something.
I said it in the lounge when you and I were talking about it when the news
and we were having a conversation, and you're like, there is zero chance that they are, you know, trolling the market, right? Like, because they would get obliterated. And I thought it was a brilliant point. I was like, because they report in a couple of weeks.
There's a lot of faith and confidence in Jensen, and if he's lying on that insane demand, there will be punishment, and he knows that.
And he knows that, right? So he's not going to be like, "Hey, I'm going to get some instant satisfaction." These
CEOs aren't politicians who come out and lie through the teeth and not get any pushback. These CEOs will get pushback. The market will punish them amazingly. It doesn't matter if NVIDIA beats on their earnings, if they don't destroy earnings, if they don't increase guidance based on this commentary that's coming out of Foxconn and Jensen, the market's going to sell them hard.
And he has zero track record of lying. Like, this guy has been a straight shooter. You know, and so why does he need to lie? So this is a really positive story for NVIDIA. It's a positive story for the space of semiconductors. It's a positive story for tech, and it is a positive story for the market as a whole. So, of course, that's the first one on my list. And then JP Morgan, Wells Fargo, pick your, you know, big bank, right? Like, you know, the price response on earnings was pretty robust. It was consistent. And what I always love is like gaps or slight gaps that run during the market. That, like, you know, like I like, because if you gap up too much and it comes down, sometimes the analysis right after can be like, well, maybe we got. No, that was strong right off the bat. BlackRock just ran all freaking day long, I swear. But you had a really positive response, man. On the specific earnings, you said that, you know, they got a base hit, right? And that's what you pretty much want out of the banks on this. They delivered that base hit, though, didn't they?
Yeah, I think you could even say they got a double out of that based on the price action response. But again, to me, it's not just a matter of do they beat EPS, do they beat revenue, what's their net income on the interest, what, you know, like all those fundamental questions you go through on earnings when it comes to the banks. To me, it's about what the market sees. To me, it's about what the market sees here. And the market saw something positive. They bought it up on the announcement, and then they gobbled it up throughout the entire trading session. Now, big green candles usually have a tendency to get a little bit of digested, right? They have a tendency to get digested a little bit. Yeah, oftentimes see those as 2 days in one type scenario. So, you know, I wouldn't be chasing big green candles here on the banks, especially going into second week earnings where there's a tremendous amount of banks. I would say Goldman Sachs report, Bank of America's report, are just as important as what we saw out of BlackRock. I would say both those two reports are infinitely more important than what we saw out of BlackRock specifically. JP Morgan is obviously the most important financial stock, and they came out with a pretty good beat. It was good numbers across the board for JP Morgan, and Jamie Dimon, as he always does, tried his best to throw some cold water on it.
And Jamie Dimon likes to talk about how things might go wrong one day, which I appreciate, right? I'm kind of glad.
I don't mind him being detailed in his thoughts and his analysis. I also take his economic projections with a grain of salt because I always think he's trying to sell something to somebody.
Well, he does have unlike Jensen Wang.
Different people, different
You
analysis.
can't always believe what
Get
Jalen.
Jensen's name out of Diamond's sentence.
All right, next stock. Give me Pepsi or Delta Airlines. I don't care which. But lukewarm, mediocre, bad, slight bad reports that got bought up and ran with. Matt, we've seen this in the early stages of earnings season. It's almost like the whole freaking market's trying to front run the seasonality for the rest of the year. Right.
It feels a little bit like that right now. On Delta and Pepsi, I just didn't love their reports.
But what I am interested in is nothing. I don't have any interest in trade Pepsi or Delta right now. But what I do have interested in is following the trend of reports that Matt says maybe aren't the best that the market runs with, right? Like, because that lets some behavioral things may be going on.
And those things are cool to catch throughout the earnings season, when you get a good report that does that for one reason or another gets gap down treatment, usually decisions made even before the earnings is coming out, and then gets gobbled up, right? You see those as positive. On the same side of the equation, if the market's going to have a bullish moment, which means it's a good day and a good week to report earnings, it was a good week to report earnings, quite frankly.
Yeah.
Well, unless you just absolutely are, dog doo-doo, you're going to get bought up on that. And that's how I would describe Pepsi and Delta. Pepsi was an okay inline report. Delta was an okay inline report, but those two reports were not reports that typically get gobbled up by the marketplace. I saw those two reports as doji type reports. Walk on a random day that ends in Y, and yet Pepsi was up throughout the week, and Delta was, quite frankly, trying to hold firm throughout their earnings report. So I didn't love the Pepsi and Delta report. I didn't think they inspired, but I also don't want to say the lack of inspiration is not the opposite impact on these two reports either. I felt like I had to do two bear picks for the bear quick hits, because I always do quick hits, and Delta and Pepsi were two of the ones I felt were not as good.
Yeah, and then let's finish off with Tesla, who had their robo taxi day. Not an earnings report, but it might as well have been an earnings report from the type of price action it got. Really negative price action. We've seen Tesla counter trend the market before, right? We saw it at the start of this year, right? Markets were doing just fine.
Well, let me ask you a question. Do you think the market cares one iota whether Tesla goes up or down?
No, the Tesla is an
I'm talking the S&P.
The S&P. No, we saw it. Go look at the start of the year. Tesla was getting beat up all the first part of the year.
I don't think Tesla's a catalyst for the market.
It's not. Tesla's a catalyst for Tesla.
Well, and discretionary, right?
Yes, it
impact discretionary.
But the reviews were generally on the side, right, of the robo taxi event. They're like, yeah. I mean, I read through some reviews. I didn't hear anything like startling. Oh my gosh, the end of Tesla.
I felt like the design of the taxi was kind of Total Recall-esque. I thought he was inspired by Total Recall. I also felt that there's open questions on when this can produce revenue and become a real thing.
Yeah,
right? There's a lot of open questions on that. And so in an environment where we have a lot to talk about in the market, I don't think the market was ready to talk about what's in store for the future.
Yeah, no, I give me some oversold conditions. It's been a while. That's when I love buying Tesla. It's when you get in oversold conditions. We'll see if this propels anything. Obviously, a chart in development. Matt, let's transition into global markets. Give me KWeb or FXI something China. There was a big event, much anticipated event over the weekend. China had scheduled a news conference for Saturday of this weekend where the finance minister was going to come out, say some things. Lots of let me just sum it up. He punted, total punt, refrained from putting a price tag on fiscal stimulus, did not talk about any.
It's usually negative to the Chinese stock market.
But what he did do is
I don't know anything about what they said or did over the weekend. So
you were busy working on your AI stuff all weekend. I know you. But he's basically said, he dangled some carrots. He said, I'm not announcing anything new today, basically. But in the coming weeks, when the legislature meets, they will have specific numbers, and I will be forthcoming, basically saying, market, if you want to tank because I'm not giving you anything, guess what? We got lots of events coming up where we're going to punish you. That's what I read from that.
So this is the equivalent of a politician coming out on a budget deal saying 3 weeks before the deal is made, listen, we got no updates here today, but that deal's getting done.
Yeah, he basically set up wide open, and China obviously did
what was
not
your read on it then? Because obviously the Chinese, this conversation has been extremely sensitive to Chinese stocks.
Okay, the general conversation and people that follow China is, oh well, market is going to have an adverse reaction because there weren't specific news. I don't know about that.
That is the usual impact.
That is the conventional wisdom, right? That would be standard. Oh, they didn't give us what
that was my initial reaction.
And you could get an initial move down, but I would watch for pattern development after that move down.
I'll tell you right now, if you don't get a move down, you got like the consolidation of the development at the low point here on some of these Chinese components here. You look at K-Web, a little bit of a king's bed consolidation type situation. You kind of take a look at FXI and a little bit of that same thing. It's been volatile and violent. There's no doubt about that. But if
that plays out to be a king's bed consolidation the last couple of weeks, that is going to provide a nice trading entry point potential.
The problem is going to be trying to catch anything on the Chinese stuff because everything gaps right now, everything. So it'd be a little bit difficult, but that's why we love commodities because
and bringing in China and the news at this specific point, because obviously commodities in China, there's a large impact, and so it's going to be interesting to see pattern development because they didn't give the market what they wanted this weekend. They didn't. The market wanted specific fiscal numbers of stimulus spending that could excite.
But they didn't stop short. They just said that's coming in the legislature.
Yeah, but they didn't say it's not coming either, right? They said in the coming weeks, and this
sounds
is
like
kind
a hint towards it a little
bit. Yeah,
bit.
it's kind of the try. We're going to make a decision, but we're not going to give you that decision today. And so you head into the week with commodities, and maybe there's some volatility at the start of the week when you have they didn't give the market what they want, but then and I talked about this in the newsletter this weekend. Expect that. And then expect things to settle in as you get into Tuesday and Wednesday, as they're like, they throw their tantrum for a minute and then they settle in, and then we see what's left. But Matt, you and I both talked at the end of the week. We talked in the newsletter. The dollar feels like it's a time to take a break, at least for a week or two, right? Coming into resistance, break down the dollar before we get into specific commodities.
Yeah, and that's what I think you're looking at on the dollar here. Is it does look like it's ready to take a little bit of a break, and a little bit of a break could just be a little bit of slowing momentum, but a slowing momentum would be exactly what the doctor ordered for this upward movement in price for the dollar. It's been an aggressive last couple of weeks on the dollar, and that aggressiveness have got right above the 9 weekly. It's came all the way up into the 20 weekly, and now you're starting to see the market turn over just a little bit, not a ton, but you are starting to see the market turn over just a little bit as it is coming in to that 20 weekly, including the upper wick of Friday's candle was exactly right where that 20 weekly is, showing you that resistance is forming just a little bit. On the flip side, gold had a bullish retracement. It pivoted back up. That looks really, really healthy. Silver got caught up in the Chinese volatility this week, and now it's on a journey back up into that overall resistance level. At the end of the day, silver, and I think this is how a lot of our community looks at silver right now, is the opportunity. Anything underneath 29.5 is aggressive. It's front running. The real situation is above 29.5. And so got caught up. Silver got caught up. So did copper get caught up in that volatility of Chinese economic data, or will they not do a bazooka of stimulus every other week? But at the end of the day, it's fighting back up into resistance on the copper side of the equation. A little bit of a pullback, very similar to what gold has done. But at the end of the day, copper, gold pulling back, trying to confirm. Silver got caught up a little bit more in that volatility, fighting back up into that 29.5 breakout channel.
Yeah, I know. So I think you expect, in gold's separate, gold's own analysis, but in other commodities, maybe expect volatility on the futures open and then settle in to see what's real, very soon thereafter. That's my take on it. Crude oil, obviously, we are in the midst of uncertainty on the Israeli response to Iran. Here, we're going about 2 weeks now since Iran launched their missiles. Improving technical condition in the wildness slightly, but this is still a very headline driven area of the market, isn't it?
Until we know what Israel's going to do.
Yeah. And then Bitcoin, I don't have anything good to say. I don't have anything bad to say. It was a nice, my Bitcoin exposure was a good candle. That feels good, but not a lot to talk about, especially when you have interesting AI. That was irreverent church service, but Bitcoin.
It was a little bit.
I like that was, let me go to church and let me get out really, really quick. Put some money in the plate. And I intend to make a few dollars to put in that plate, Matt, through trades, investments, position trades in AI related spaces, not just this week, not just this month, not just next year, but AI, Matt. And this is my first question for you, and I got a few questions for you.
Mm-hmm.
As my AI guy, and I call you my AI guy because you understand the AI space better than anyone I read, I follow, and I'm talking big banks, this and that. You get this space. You've been front running it in your knowledge. You won't front run a technical chart. I know you very often, but you've been front running this conversation on AI in your research, in your knowledge, in your understanding of it. And when I read your recent update to your AI presentation that you're going to do this week at the live event, be sure to register for that. It stood out again. And so when I call you my AI guy, I say it affectionately, but I say it seriously. Matt, this question, this first high level question, and I got like 4 or 5 other questions, where have we come in the last 2 years, right? Since you first started talking AI to today, right? Just talk about the general, your own, and from your own understanding perspective, not from society.
The way I describe the AI build out right now, and it's still a build out. We're still in the very early innings of this conversation of AI. This is not a fad. That's number one. I've been saying that for 2 years. This is a real conversation of real importance. It is probably the number one most important conversation to the market. And ever since NVIDIA came out with their first chip, and we've been on that conversation ever since NVIDIA announced it, quite frankly. And I've taken a massive interest in this conversation on AI for multiple different reasons. Obviously, for the purpose here on the stock market and the stocks that are kind of leading that conversation in AI and the AI build out. I remember putting together my first edition of the AI Gold Rush watch list, and it had NVIDIA and AMD and Taiwan Semiconductor and all those important stocks like Apple and Google and Microsoft and so on and so forth. But it was really just I think the number one difference, Mark, is a year and a half ago, it was really just the big tech stocks that was the conversation. And I would talk to people in those early webinars about how down the road it's going to become a little bit more expansive, how this AI conversation is going to impact every other area of the market in some way, some shape, some form, some from an efficiency perspective, others from a growth perspective. But AI was going to touch everything. And I think, right now people are looking at the AI saying, how are these companies going to monetize AI to the level where it becomes a really important conversation for these tech companies? But to me, I think we all need to be a little bit patient on that AI on that part of it, because I remember when the server farms were being built 10, 15 years ago, and Microsoft and Amazon were kind of leading in that arms race of server farm domination and whatnot. And all of a sudden, Microsoft, when they came out with their cloud-based system, Azure, it had very little impact to Microsoft's earnings numbers. It had very little impact to anything, but it became a very important part of their earnings conversation from a growth perspective. And when they were doing 5, 7, 9, 10% against their total revenue number, you saw that just as an improving condition. And now they're doing 30% growth numbers out of Azure. These things take some time. And so how are these companies going to monetize all of the AI conversation? The thing I know about corporate America is they will learn how to monetize it. There's no doubt about that. But the point is, to answer your question specifically, how it has changed is it's not just the semiconductors any longer. It's not just Taiwan Semiconductor. It's not just NVIDIA and AMD and no, it's not even just a tech conversation. We are now at the point where every company in the S&P 500 utilizes some degree of AI solution. Many companies are utilizing AI from an efficiency perspective right now. And so I think the number one difference, Mark, is now we're starting to see the impacts from an efficiency perspective downstream. For example, let's say you're dealing with a basic material stock. These are gold companies, silver companies, copper companies, these not exactly the technology companies, right? But you got companies like Dow Chem, and you got companies like FCX, Freeport, that are investing heavily in AI solutions. That take Freeport, for example. Not only is Freeport investing heavily in AI solutions to help their efficiency of mining operations, which they are doing quite aggressively, but they're also supply the copper to build out some of the chips that you need from a technology perspective. And so you got Dow Chem, you got FCX. When you look at healthcare companies, almost every healthcare company is using some degree of AI solution. Doctors, for crying out loud, are using AI to write prescriptions today. You have our robotic AI arms helping out with surgery. I mean, and so from healthcare to basic materials to finance and fraud prevention to obviously your tech companies, your con companies, to consumer discretionary companies utilizing AI in marketing messages. It is now not just a technology Mag 7 conversation. We're now firmly entrenched in the downstream impact. And so I think then the number one difference between now and a year and a half ago is a year and a half ago, it was all just the build out phase. It was all about NVIDIA. It was all about those leaders in the race that were building it, the innovators that were building it. We're now past that. Remember when you Mark, when you think about the adoption of a new technology, a year and a half ago, we were in the innovator stage of this technology. Now we're starting to see mass adoption. And that is a fundamental difference. And I'm going to talk about that aggressively and extensively in the webinar, because as you understand the behaviorals of mass adoption, it doesn't work differently for AI than it did for any other acceptance of technology along the way, including new currencies and new ways of thinking. And so I just feel we're a little bit further down in terms of mass adoption here, and there's not a stock in the S&P 500 right now that does not have some degree of outfit in their company that is strategically trying to adopt and utilize artificial intelligence solutions.
Yeah. Okay. So my next question was on, the build out, concept. One of the things, and you addressed some of my, question in your last answer, but one of the things when I hear you speak on AI, you go out of your way, and I know you very well because I've known you for decades, you to emphasize the words build out, right? Like you will, I don't know if it's conscious or subconscious, but you'll be like, to emphasize in teaching people we are in the build out phase.
Well, it's because people feel they miss everything if they're not the first person involved in something. And I see this in phases, right? I see this in phases. And phase one was really about NVIDIA. It really was. NVIDIA started something. Obviously, they're the biggest part of this conversation. Their downstream is beyond impressive. the downstream impact of every company, every space that NVIDIA impacts. It's beyond impressive, but we see this in phases. The first phase was really just the introduction and development of the technology itself. And now you're starting to see the adoption of that technology and the utilization of that technology from an efficiency perspective. And that's where we're really kind of in.
And do you foresee that these two, like, build out mass adoption phases lasting years in conjunction in the next couple of years?
I think this conversation will be part of our entire lives as long as you and I live.
Okay. Yeah. Okay. Turning to, yeah, I just, you know, and I love how you do that, though, emphasizing the build out, because it is very easy. And this is a point that you have made.
Starting to build out energy companies on it.
Yeah. I mean, because you have made this point to traders in tackle trading and other speeches you've done in other places. You did it 6 months ago. You did it 9 months ago. You did it 3 months ago. You did a year. It's like, you haven't missed anything yet, people. Right.
Yeah, I've said it for 2 years.
Like, you know, and so, you know, NVIDIA's up 28%. You haven't missed anything, you know, like.
Did you miss Apple because you didn't invest in it in 1996?
And you've tried to drive that home. And
did you miss NVIDIA because you didn't catch it in 2011? Did you miss Tesla because you weren't around in 2012? Did you miss Netflix when it came out with IPO?
And you've done a great job emphasizing that. Next question I have is turning to the actual AI watch list, that if you attend the event coming up on Wednesday, register, links here in chat, you know, register for that event and get that list. My question on this, and I'm going to have a couple follow-ups on this, is that when I read it, it feels like you're designing a portfolio, right? Like it feels like you are like, all right, I'm going to present you a list, but I'm going to do it in a manner in which it has a feel of some portfolio design to it. Can you speak to that?
I certainly took portfolio design as part of the equation in building out this latest edition of the AI Gold Rush watch list. There's no doubt about that. I felt it very important to include companies downstream in the AI build out this go around. I thought it was time to start embracing non-tech names, non-com names, non-names that you would think are associated with the creation of the technology in the creation of this AI Gold Rush watch list. And so, yeah, I think since we're a little bit further downstream in the conversation of the build out, we've seen some very, very important news stories, such as Microsoft and Constellation restarting that nuclear reactor and on that 3 Mile Island. You've seen OpenAI invest directly in nuclear power plants to basically provide the energy for their server farms. You've seen these massive server farms out of, for example, Mark, you would be amazed when you think of XLRE, for example. That's the real estate REITs area of the market. We just call it the real estate market. There's 2 stocks in there that made my list. Because they're server farms, and those server farms are utilized in both cloud AI and so on and so forth. And so the conversation has just shifted. It has shifted from the immediate build out of the actual technology to the build out of the infrastructure to support the technology. And when you go through that phase, you have to be willing to adapt and change. And I do think that's the number one difference in the watch list this time, is I did take into account portfolio design. I did take into account the downstream impact of the AI conversation in the build out. And so, yeah, I certainly did. But I would say the design probably was more close to if I were to design an AI ETF, to track the entire AI build out, not just let me go find those 20 most aggressive tech companies that are doing things in AI. But if I were to design, I kind of asked myself a question when I was doing the design process. If I were to design a watch list, an ETF that would track the entire AI conversation, what stocks would I put into there? And I'm going to tell you right now, there would be healthcare companies in there. There would be basic material companies in there. There would be utility companies in there. And so I really wanted to ensure that there was some diversification of the list this go around. And I wanted to make sure that some of those best and brightest companies that are non quote unquote tech names that are important to the build-out, that they had representation in a diversified ETF.
Yeah. Now, a build off and a follow-up question on that is that in your list,
By the way, it's in my list. I also ranked them 1 through 25 on
and I was that leads into about what I'm going to say right now, which is your most robust list yet. You break these down into tiers. You have them numerically listed, not just 1 to 25, 1 to 65. You have 3 tiers. So you have a tier 1, a tier 2, and a tier 3. And then you have, I would call it tier 4. You don't specifically call it tier 4. It is a best of the rest.
Not good enough to make the final cut.
But, because but we just talk about these tiers a little bit so that when somebody sees the list, when they go to the event and they get the list, just talk a little bit about the tiers, because your eyes, I know consumers, I know me. Before I read the stuff, I'm going to look at the list.
I know people won't even read most of it. Just get the list. And that's why you're listening to the podcast, so you don't have to read it. That's why you listen to me teach about it on Wednesday, so you don't have to read it. That's fine. Everybody wants the list. Everybody loves the list. I have 3 tiers in the list. I have tier 1, tier 2, tier 3. Tier 1 companies are the most important companies to the AI marketplace. Without these companies, there is not AI. That's the top 10. I expanded that from, I think, 6 to 10 companies this time around, because again, we're just further down the road. The next 10, those are the top 5. So I have a top 5, then I got the next 10, then I got the last 10. Those top 5 are just like, let's be real, like every one of us can name those top 5 companies. You got the Microsofts and the Googles and the NVIDIAs of the world and the AMDs of the world. And then you got that second list, the tier 2 companies are extremely important companies, obviously, but they just don't have it. Let me put it like this. They may not have it in multiple aspects of their company. For example, Google has this conversation in every segment of their company. NVIDIA, this is all this NVIDIA does, is AI. And so those second 10 are really important companies, but they just don't have the totality of the impact that the leaders do. And then the last 10, just to finish out the 25, are the companies that are part of the build out, but aren't necessarily just technology companies, like I was talking about in terms of the diversification. And then I wanted to rank the companies that were under some degree of consideration for the list. I just wanted to rank them of importance so that our community could see, where are those stocks that maybe aren't good enough to make the list? Because I did take into account fundamental analysis too, Mark. And so I did take into account valuation.
Yeah, like I said, like this portfolio. Right.
And so I take a company like Sound. SOUN is the symbol. Real good technology, real good from a listening perspective, a real good AI function, no doubt about that. But and good opportunity. I'm not trying to say that, but are they a top 25 AI name? No, they are not. Especially when you have to take into account healthcare companies, basic material companies, finance companies. What I wanted to answer are who are the best and the brightest and the greatest companies in each sector driving this conversation. This webinar is not just about understanding what is AI. It's about understanding the complete conversation from the build out to the end result so that you can be your most effective and efficient self. Now, am I going to have 65 companies that I'm talking about on Wednesday? No, we're going to go through the top 25, but I will give the complete list to anybody who is there.
All right. My final question is kind of
By the way, this will probably be the last time I give that list away. It will probably be parked
it's
in.
awesome work, dude. It's awesome
It's
work. It just is.
it's becoming more than just something I do. It's becoming something important to our community. And we have Tackle 25 is the end all be all list at Tackle Trading. It is the best list for awesome, fundamentally strong companies that you can do covered calls and cash flow on. I might put the artificial intelligence gold rush watch list into the T25 category.
All right. So my final question is: somebody attends the webinar, the event on Wednesday with you. If you had them to take away one thing from your message, what would it be?
Become a pro member and have these conversations every day. Like,
I like that actually.
You want to actually have a fundamental impact to your life and not just a fundamental impact to your moment. Become a pro member of Tackle Trading. We've been having these conversations for 2 years at Tackle.
Yeah, no, well said. Well said.
That might not be the one they want to hear, but that's the answer they need to hear, in my estimation. Is if you want to be that individual that cash flows all the time and compounds, well, then get into the covered calls and start doing that. If you want to be the individual that has a deep understanding of AI and how to navigate that, Mark, some of the most aggressive people, most successful people, and most intelligent people in the world are on this AI conversation. If you want to be a part of that, yeah, there's a lot of ways to learn about it. There's no doubt. And at Tackle Trading is not the only one, but I will tell you, nobody in the financial industry will have as detailed, honest, straightforward conversations on this topic or any topic than we do with our community at Tackle Trading.
No, it's an important conversation. Matt, I've enjoyed this podcast very much. I've enjoyed talking about AI, the other things going in the market. We'll continue to do our best job every podcast to bring you information, analysis, everything, as we see it. We make some pretty good, decent calls here on the podcast, share them with the world. But Matt, give us some final thoughts as we close out the podcast.
Yeah, as always, thank you so much for being the best part of our community at Tackle Trading and Trading Justice. Thank you for listening and watching the pod. Best way to support us on the pod is to certainly give us a like and share. Help us out with those Twitter X algorithms, YouTube algorithms, Facebook algorithms. We put the podcast everywhere because obviously people they like their things, and so we like to make sure they have access to it. But that's the best way to support the pod. And hopefully I see everybody at the AI Gold Rush webinar on October 16th, 7 p.m. Eastern Standard Time. Once again, you can register for that at the link in the description below. That's on YouTube. Also, looking forward to seeing you there.
Yeah, everyone have a fantastic week.